Hey everybody, thank you for joining me. This is Jeremy Torgerson with nVest Advisors, Money in 30 podcast, kind of an impromptu podcast put together today, Friday, July 8th, 2016. I don't normally want to make any of these that timely because I don't want the podcast to date. I want you to be able to refer back to the information in them, and hopefully they're a little bit more timeless. But in this instance, I wanted to get on the air this afternoon and say a couple of things, and the events of the last few days in terms of media coverage of several events in not only this country but in the world have prompted me to think a lot about the media's role in our emotional states sometimes, and how letting other people tell you how to feel about certain things is probably a terrible thing to do. Our website, by the way, is www.nvestadvisors.com. That's nvest advisors.com. On that website, you can learn a lot about my firm, how we invest client money, the kinds of people that are better suited to be our clients, and various blog entries about some of our investing philosophy and how we believe about handling client money correctly, and what we believe in and how we do it, all that kind of good stuff. So I want to make sure that you are aware that a couple of things, housekeeping real quick, and then we'll move on to today's subject. Today, again, is Friday, July 8th. Last night in Dallas, Texas, a gunman, at least one, the details are still sketchy, shot at least 12 police officers, it appears. Looks like 5 have passed away. We are not in Dallas, Texas, but we are in Texas. nVest Advisors is currently in Brownsville, Texas, so clear on the other end of the state. But our heart is so moved by the tragedy that's happened. nVest Advisors fully and wholeheartedly, enthusiastically supports our men and women in uniform, whether that is military or that is our local police officers or fire department officials who do so much work for the citizens, keeping us safe and protecting us from everything that's out there. And so I just want to say, as the CEO of this company, our prayers are with you, your families tonight. Frankly, we pray every day in this firm for not only that we do well by our clients and that we are the best possible fiduciaries and good stewards of the trust that our clients place in us, but we pray often for our communities, for each other, and for our nation. And I think it's important that tonight, when you have a moment, you're at the dinner table or you're getting ready for bed, somebody's families have a loved one not coming home tonight, and those people were out. They rushed toward the danger to save the protesters at that Black Lives Movement rally in Dallas. They rushed toward danger to save other people, and there is no greater human being than one that will rush right into the arms of death to save a stranger. So my heart is definitely moved by the tragedy, and I think, you know what, folks, for the next several days at least, if you happen to be out at a restaurant or coffee shop and you happen to see a police officer, buy him or her their meal and tell them, and just say thank you for what they do. The other thing I would say is just a person, as a citizen, not as necessarily a company head, but as just a private person. The division in our country that I think is being pushed upon us by the political powers to divide us along so many fault lines in our country, whether that be race or economics. They tried that first with the 1% versus the 99%, and then it's black versus white, and then it's people who want a secure border must be racist and not liking Latinos or Hispanics. None of that is true. My home and my office is in Brownsville, Texas, right on the border. And I can tell you, as a concerned citizen, I want tough, strong border control. I want to know, as a citizen, who is crossing that river and coming right by my home and my kids' schools every day. I want to know that we know who's being let in. But I also, and it has nothing to do with race. It has everything to do with safety. We don't lock our house doors at night, and I don't lock my office door here to keep, because I hate the people outside. I lock my door at night because I love the people inside. And so that's what I feel like about America also. So I'll get off my political soapbox. I don't want to turn that into this. But in the last couple of days, we've had a lot of issues. And speaking of that, that's what we want to cover in today's podcast is how to make sure that you keep perspective when it seems like we're being just bombarded from every direction with bad news and with negativity. Let me start with a couple of other things. And also one last quick house-taking note before we get started. This will be dated before most people hear it, but I want to make sure you're aware. nVest Advisors does a series of free webinars once per month called the Saturday Academy. And the next one, the only reason I bring it up, is tomorrow morning at 9 a.m. Central. We're holding a live webinar, free to the public, no sales pressure, no gimmicks, no gotchas, just a free information webinar. If you are pre-retirement and are needing to figure out how to create a plan for retirement, this 1 hour webinar is for you. And we love Saturday Academy and we love webinars because you can sit there in your pajamas, sipping your cup of coffee on your tablet, on your phone, or on your desktop computer, and I can do the same thing and give you that information so you can become a little bit more financially savvy and not even have to leave the house or get dressed to do it. So we hope that you'll join us. You do need to register ahead of time on any of these Saturday Academies, so please check the website under investadvisors.com. There's a tab at the front called Resources, and then there's one called Upcoming Events. And if you click on that tab, you'll be able to see some titles of some of the upcoming events. You click on that page, and it'll take you right to a registration page. We don't ask much info on registration, but we do have to keep, because of regulations in our industry, keep tabs on who comes and from where. So please register for it. You'll get a couple of email reminders ahead of the events, and then hopefully we can join you there. So there is still time to join tomorrow morning's webinar, and then we will also set that up for a repeat if you miss it and would like to watch it at the same place. Go to investadvisors.com and look for that. It's called Retirement, How to Actually Get There is the name of the webinar. I'm excited to do it for tomorrow. All right, moving on to this situation that happened yesterday. Let me actually take it back a little bit further, because one that impacts the economy more and may have impacted your investment accounts a little bit more recently was this vote, if you've heard it, called Brexit. And if you're not familiar or lived under a rock and didn't watch any news for the last 2 weeks, Brexit is an abbreviated form for British exit. And it means the United Kingdom as a consolidated several countries that are, Britain, Wales, Scotland, voted to leave the European Union, of which they were one of 28 nations that had formed a kind of common bond. They had been in the European Union for 43 years. That's why many of the younger people who were interviewed, I believe, said they could not imagine why older people wanted to leave the European Union. Is because people younger than 45 or 50 have no memory of what it was for the British people to be their own sovereign nation and not part of a larger collective unit. And so, but the older people saw that they believe a greater future for Britain if Britain leaves the Union. I tend to believe, as a financial advisor, but also as a kind of a student of politics and a student of history, the British people are going to do just fine, and I think they will be better off leaving the European Union. I think actually what you'll see is that the British exit will not be the last country to leave, and I think that the European Union has a lot of soul-searching to do if they want to stay viable as a political and economic power. I don't think that there's going to be a long future for the European Union at this point. You have two basically different groups of countries. You have producing countries, and you have countries that are taking from the European Union. And right now, the British economy is being literally dragged down by remaining. So I think that will happen. But what you saw in the aftermath, and I was watching the British news late on that Friday morning. It was like late Thursday night last week when the vote came down. And I immediately wrote a blog entry on our website and sent out an email to our clients because I knew that Friday morning stock market would be awful. And it was mostly because the market gurus, the brainiacs in our industry, who are wrong more often than they are right, but for some reason they keep getting paraded in front of us as if they are geniuses, missed this completely. Literally, even after the polls had closed and the vote tally had begun, nobody expected that this was going to be a vote to leave the European Union. The powers that be just said, well, no country. Why would anybody want to be sovereign when they can be, one voice in a chorus instead of their own country? And so they had the audacity always to believe that they were right. And when they were not right, shock waves rippled through not only the stock markets, but the currency exchange markets and elsewhere. So I think it's important for everybody to understand at the outset that the world's investment markets are not really moved that much by you and me. Okay, our accounts are very small in comparison to the many, many, many trillions of dollars that are owned by hedge funds and foundations and 401k things and pensions and governments, and there's a whole lot of more money in what they call these types of big accounts institutional investors. So the institutional investors are the ones who move the markets up or down, and we kind of have to go along for the ride. The institutional investors also rely on a few very well-paid analysts from a few very prominent financial firms to make those investment guesses. The investment guesses have, again, usually most investment analysts are less accurate than a coin toss, just to keep that in perspective as we talk a little bit. So anyway, nobody expected that this British vote was going to happen the way it did on Thursday night. So the markets had not reacted very much to it previous. When the vote went the other way, though, I knew that there would be a lot of panic. So I wrote a blog entry and sent an email to clients about 11 o'clock local time that night, just warning you guys that the next few days in the market was going to be brutal, but that the British people have a long and very successful history of being self-reliant. At one point, the British Empire covered most of the globe, and so that's not something that I was terribly worried about. I think that the British people, once they went over the shock of it, they were going to be fine. The other thing to remember was the vote did not happen immediately. The British people had, there's still about a 2-year process to unwind the European Union affiliation, and then they would just set up their own individual trade agreements with either the countries in the EU or with the EU itself, and that they would move on. So I knew that this was not going to be a significant problem for the British people, but I did know that it caught the investment markets completely by surprise. And so that was going to be a tumultuous market mover for at least a while. It's actually smoothed out faster than I expected. I kind of thought for the next month or two we would have some financial ups and downs, but that did not happen. So anyway, we wanted to, as I was watching the news that morning, and I already sent my email out to clients, so I was getting ready in the morning, Friday morning, to come into the office, and I had the news on my bedroom television set. I was around the corner in the bathroom getting ready. And it's interesting when you listen to the news rather than watch it. I think when we watch, we all take in the visual and sort of slack-jaw stare at it without really processing it. And when you have to listen, which is probably the benefit of things like this podcast or things like talk radio, when you have to listen, you engage your mind differently. So as I was listening to the news, the TV news, they were coming up on a commercial break, and the announcer said, when we come back, more about this Brexit vote and why you should be worried about it. And I perked up, and I thought, wait a minute, not only did the media just tell me what they thought the news was, but they also had the audacity, frankly, to tell me what I should be feeling about it. And that was a real eye-opener for me, that our media they used to, I'll say this, we used to have, not too long ago, for some of you real younger ones, you'll never know this, but there used to be reporters in the United States that would go out, they'd work their beat, something would happen, they would report it, their editors would say, give me two sides, two sources on each side of the argument, or whatever the editorial mandate was, and then the reporter would crank out a story, such and such happened, so-and-so from the city hall said this, so-and-so from the labor union said this, and that was it. So it was very factual reporting, and yes, there was always a little bit of editorial discretion about what made the news, but it wasn't something that the reader was being led the way that we do now. And so to hear the media say basically this, Brexit was awful, and you should feel terrible, and shame on the British people for voting this way. And it made me realize that we don't really have a free, well, we have free media, but the idea of objective, unbiased media is a joke. It's been dead for a long time. So when I sat here and listened to the guys talk, I thought, well, first of all, why would news media, why would they care? Why would they say we should be worried about it? What possible value could Mr. News Anchor sitting at a desk in New York City reading a teleprompter, why would he want you worried about it? And then it reminded me of several media classes and some education that I've learned over the years, especially in this line of work. And that is this simple concept. The media is very tuned in, like any good marketer really would be, to our ability to be manipulated emotionally. And that, for example, there's an old saying in media, if it bleeds, it leads. And there's a reason for that. It's because we won't tune in to a boring newscast about Bob had dinner at Sally's house and they discussed, the last ballet and things were good and this young person pulled a cat out of the tree. That kind of news would be not something that why we don't want to hear good news. I don't know. I wish that we did as people. I really wish we did. I think we'd be a better country if the news even just split. Give us the last 25% of the news and tell us something positive. The world would be a better, happier place every morning. But they don't. And the reason for that is because human beings, just like every other animal in the animal kingdom, we have a heightened sense of alertness and attention span if we sense danger. And so if the news media can give you robbery down the street, there was a shooting such and such, there was a murder here, there was arson here, it causes us to feel tense, it causes us to feel self-protective, and it makes us watch. We're tuned in specifically. In fact, I'll even give you kind of a paraphrase quote. I wish I had it in front of me. Roger Ailes, one of the head guys at Fox News, was once quoted as saying this: We're not in the news business. We're not even in the entertainment business. We're in the advertising business. And if we can paralyze you between commercial breaks, we win as a business model. So their idea is to be more and more and more sensational in their headlines and in their news coverage because they know it works to make us tune in. Okay? The same thing happens in this industry and any other. I mean, look at some of the shocking, not talented, but very, very shocking musical performers out there. I'm not going to have to name names. You all can think of a few that have no talent, but they are provocative, and that causes the attention that they seek. I've seen some things that are described sometimes as modern art. And as a semi-pro actor, I'm kind of familiar with art and performing art and those kinds of things. But when you see somebody who is up there, like on stage, rolling in butter and throwing themselves against a piece of plastic, I mean, you've seen everything, and they call that modern performance, interpretive dance or modern art. And I'm sitting out here as an actor, as a trained actor, saying that is talentless nonsense. That isn't talent. That's being a provocateur because you lack talent. So I'm sorry, I digressed there for a minute. But the news media is provocative, and that's how they get you. the Ponzi schemes in the financial services industry. Same thing. The guy will come out and with a sales pitch that everybody knows is too good to be true. And yet we want to believe it. We want to follow that. We want to believe that Bernie Madoff really, really could get us always a guaranteed 11% over the market returns, which is what he promised. And, the funny thing is, Bernie did not milk little old ladies or poor working, blue-collar, working-class people out of their small accounts. Bernie Madoff made his pitch to multi-millionaires, people who have already had more money than they ever needed. And guess what? They still fell for the scam. So we're all the same when you take away all of our wealth and our incomes and our professional degrees. And we are all very, very guilty of the same emotional triggers that your neighbor is just like you. You may not think so, but you're not. So, but you are. You really are. Okay, so before my Friday afternoon podcast becomes a Friday evening podcast, let me kind of get to the 3 talking points I wanted to bring you guys today. When you're dealing with the media and you are an investor, especially when you're an investor, this is what I really want to talk to you about, is that, the news is going to depress you. They're going to make you feel certain things about what's going on in the world. Understood, okay? But when you're an investor, you have to be even more careful to make sure that emotions do not govern your thinking in any way when it comes to making money decisions. That's extremely hard to do, even for a guy who's trained like myself. But that's one of the most important reasons why you should consider having a financial advisor. It is not because you can't go to Scottrade or one of these other discount broker online firms and buy a stock or buy a mutual fund at Vanguard on your own. You can do that. There's no problem with that. You could probably do your own research, as dull and dry as that is, of finding the right investment for you. What you won't be able to do well is get out of your own way when it comes to dealing with money in an unemotional way. And that's what your financial advisor should be doing for you. If they're not, find another one. And by the way, I'm taking new clients, so give me a call if you're looking for a financial advisor. Shameless plug. That's what I call those. Okay, so here's the 3 things I want you to remember, like we said. Number 1 is if it bleeds, it leads. Okay? That's very, very important to remember. There's much more good happening in the world today than bad. Otherwise, if it was bad news, they wouldn't have to repeat the same headlines every hour. They'd have 24 hours a day of brand new headlines. There's many, 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 many more good things in the world than bad. There are many, many, many more good people in the world than bad. Unfortunately, watching good people do good things would be pretty boring TV to human beings, and so we turn in to watch the train wrecks on reality TV. We turn in to watch the cat fights on soap operas, and we tune in to watch the bad news and the bad headlines on the news. So I wish it wasn't true, but it is. So please remember that. Number 2, emotions in investing are devastating things. Okay? You can't make emotional decisions with money. And that is very hard not to do. Okay? So the important thing there's a whole field of study on this, guys, called behavioral economics, or behavioral finance, it's also called. And the study is a question of why do people, even though economics itself is incredibly rational and logical and unsexy and very emotionless thing. If supply is greater than demand, then prices will drop. If demand is greater than supply, then prices will rise, and you'll find the curve, and you'll find the exact right price point in production. It's very, very methodical, and this business can be that way a lot. In far as on the financial advising side of economics, which is what I'm in. We get with a client and we say, all right, you are Mr. and Mrs. Jones, you are 45 years old each, you want to retire at 65, well, that's a 20-year time horizon, your risk tolerance is average for people your age, and then you need to, your goal is you have $7,000 a month in today's dollars for retirement, you have about $3,000 of it covered in a pension, so we have $4,000 a month that we need to build a lump sum for. We anticipate your lifespan to be 85 for you, sir, 89 for you, ma'am, and we are going to figure out, and how much do you want to leave for children? None, okay, great, because that's a long retirement. And so it's very logical. It's very methodical. And so we can create for you a plan that literally takes you from today to retirement, and we'll know exactly the dollar amount that we should be trying to achieve. Okay? That kind of work is very, it's not easy to do, but it's the bread and butter of a financial advisor and some CPAs, but mostly financial planner, financial advisors' life. How do I get you from here to there and get everything out of the way that could possibly derail this plan? So we look at insurances and do we have, do we need to fund a college, or do we anticipate an inheritance? Or there's all these little check boxes that we go through to help you create a financial plan. And then we will toss across the desk at you a 40-page beautiful report that has lots of graphs, and we'll ooh and ah together, and you guys will think, this is my plan. And if I take it home, if we follow it, we're going to get where we're going. And rationally, that's correct. If you rationally did this and there was nothing, you never got in your own way, and life did not throw you any curveballs, you could follow this plan exactly. Now, that's the problem. If you could go get a financial plan, pay somebody to do it, and then off on your own to wander your way through the wilderness toward that goal line. But the relationships that I have with clients have to do with the fact that life gets in the way a lot. I mean, I've had clients that have been divorced. We've had unexpected people become very ill and have extraordinary health costs. We've had people pass away unexpectedly. We've had a surprise pregnancies, things that all of a sudden we're like, oh, we thought we were saving for retirement. Now we got a kid to put through college. So, or maybe that you have adult children and you need to bring your grandchildren in and help raise them or help financially care for them. The world is different than what we can put on paper sometimes. So I can anticipate an average number of things that get in the way for a family, but everybody's life is different. I could give you a couple of examples of that, and I may in future podcasts about that. But the idea of keeping emotions out of it, it's harder to do than most people think. And so my advice to you is this. When you have, you're investing, let's say that you're putting money in your 401k, or your 403b if you're a school teacher, or your IRA, however you're putting money away, and you're working toward a goal. Let's say you've even met with a guy like me, and you have your financial plan, and you're 25 years away from retirement, and you're plugging away your $300, $400, $500 a month, or whatever you're putting in toward your retirement goals. And then the stock market takes a huge crash down, and you may not pay attention. If you're like most Americans, you don't pay attention day to day to the stock market movements. When you're retired, you sure do. You really do. But when you're just out there slugging it away, and you're still, you got kids, sports leagues to get to, and you've got, that kind of thing going on. You don't pay attention until the statement comes, and then if let's say your statement on your 401k comes every quarter, and you get your statement and it's down 5% for the quarter, or it's down even for 2 quarters in a row, or 3 quarters in a row, or even a full year down, you will go through a very normal emotional reaction to that change. And what you will want to do is to protect that savings, because we all know that the fear of loss is much more powerful than the pain of loss, rather, is much more powerful motivator than the gain, than the joy and the pleasure of gain. We will always steer away from pain before we will ever steer toward pleasure. That's something that we know about the human condition. So when you see loss in the markets, you will instinctively want to protect what's left of that money and pull it away from the market. That's one of the reasons why a market downturn can turn into a multi-day downturn, is because people are reacting emotionally to it and selling out when they should actually be buying in. Let me take it away from investments for just a minute and ask you guys a different question. If you were shopping for a TV set, and you go to the store, and the TV sets, they have a sign on the TV set that said, massive sale, everything half off. That would be the time, right, to go buy a TV set. So that's when you do it. Now, if you were going to sell your TV set at this strange store that would take your TV set back, the time when TV sets are at the low on the massive sale would probably not be the time you want to sell your TV, right? You want to sell your TV when you can get the most price for it. Let's even change the TV scenario to houses. Let's say you're shopping for houses. If the housing market is down, and just terrible, like we've had the last few years, I don't think I've saw many homeowners that said, oh my God, I'm down, our house value is down, let's get it on the market and sell it at a loss. Nobody does that. People say, well, I can't sell the house right now because we have to wait for the house market prices to go back up. But you didn't think there was something fundamentally wrong with your house. Just because the house value went down in a market didn't mean that the house had come off its foundation and was tipping sideways. There was nothing wrong with the house. There was something wrong with the market. And I hope that makes sense. The same thing goes with stocks, though. But we think about our investments completely opposite than we would a house, even though our house is an investment also. So when you buy stock, and let's say you buy Pepsi-Cola, okay? A big, solid dinosaur company that's everywhere in the world, and there's really no risk of a company collapsing on Pepsi. But let's say the stock market goes down, and your Pepsi stock is down 15%, which would be huge for them. Do you sell the stock just because it's down? And the question is, of course not. No, why would you? Except that when you see your stock down, your instinct will be to sell it, even though that is logically the worst thing to do. In fact, let me give you one better. If you are 40 years old or 50 years old and you're contributing to your 401k on a regular basis, or you've got money to invest, you really, really want times when the stock market is beat up and down significantly. Why? Because you are buying. You're looking for the sale. Okay. When the market matters on the day-to-day thing, or when you should panic when the market is down, is when you are now 75, 80 years old and you're having to sell a little bit of your stock to cover this month's expenses. Yeah, you want to sell when it's high, right? And buy when it's low. That old saying, buy low, sell high. But because we are emotional about our money, human beings almost always make the opposite transaction. You'll almost always wait until the price is high to buy because you're waiting to get confident. And then you will always sell it when it's low because you panic. And the big guys in the industry know this, guys. They know that the average investor is going to make that mistake over and over and over and over again. And that's why the tallest building in your city right now is owned by a bank or an insurance company. And that is because they know how money works and we don't. And my job and my mission in this business is to help you learn how money works. If I can get you to think like they think, you can have what they have. Okay? So the bad guys... I'm sorry, that was a little Freudian. The big guys, sometimes bad, not always, are playing a game with money, whereas we are holding on to it for dear life. And we make emotional mistakes that they won't make. In fact, they're counting on you selling when things are low so that they can pick up your stock cheaply. And then when the market goes up and you're feeling more confident, they're more than happy to sell it back to you at a high price. That's how profit's made. And until the average investor, those of us like us, working class folks, understand that thought process and get the emotion out of it, you'll make that mistake over and over and over again. Okay? So the number one thing that you can take from that little bullet point of my talk today is this. The vast majority of you will not be able to govern your emotions correctly. And if that is the case, the vast majority of you should find an investment advisor with whom you can build a relationship and with whom you can build some trust. Okay? Because my job as a financial advisor is to lay on the hood of your car and not let you make emotional mistakes with your money. I'm going to do everything I can to keep you from veering off the cliff. Okay? The last bullet point I want to talk to you about, when things feel bad and when things are beating you up, is a simple verse from Scripture that I love so much called, it just says this too shall pass. When you are 75 years old, if you're 45 today, You won't remember, unfortunately, you won't remember this Dallas shooting that happened. Unfortunately, you won't remember the Orlando shooting. And it's not because you're 75 and you won't remember anything. It's because because things will have, there's something in behavioral neurofinance called recency bias, that things that happen in this short term, things that just happened around us, always feel worse than something maybe much worse that happened but 20 years ago. Okay, so things that happen right now when we're 75, there'll be some new terrorist type thing going on in the world, or there'll be some new calamity of some sort, and we'll think, my God, this is the worst thing that's ever happened, not knowing or not even remembering that 9/11 happened and World War II happened. There are things that we're guilty of, and one of which is that time heals and time fades things. So what I want you to remember is this will pass, okay? I want you to keep your eye focused on the long-term goal, especially when it comes to any money, okay? Keep your historical perspective. See the forest through the trees, if that's one analogy I might use. You need to be able, if you have a 25-year window to retirement, then your focus should be clear out there, not on what's happening today. Let me give you a quick analogy, and then I'll wrap up today's podcast. I'm teaching my daughter how to drive her car. And it's always interesting because this is our second. My son is many years driving. My daughter's just getting started. But when I've taught both of my kids to drive, and I noticed I did this as a young driver too, but they kind of instinctively want to just look at the hood of the car or look like only a few feet in front of the car to drive. And so they overcorrect. They're always weaving a little bit too much, and they're panicking. And so I watched the car zig and zag down the street a little bit, and I said, no. I told my daughter, sweetheart, don't look at the hood, or don't look, a few feet in front of the car. Lift your eyes and look down at the horizon. Look as far down the road as you can see. Now, obviously, you want to keep your periphery and you're checking your rearview mirrors and things and making your glances, but look down the road. And when you do that, your driving smooths out because you're not trying to veer every little thing that's not really urgent in front of you anyway. You're just trying to keep the car in a straight line down the road. Folks, investing is the same thing. Investing is about keeping your eye way down the road and quit trying to veer and swerve away from imaginary dangers right in front of you. Keep your eye on the prize. Drive, and that'll smooth out the ride for you, I promise. Okay? So, a few things today to remember, if I can wrap up. Remember the news. If it bleeds, it leads. And just remember that you're getting a vastly disproportionate number of negative things when you watch the news. Here's a great idea. Turn the thing off. Go outside. The sun is still shining. Birds are still chirping. Occasionally, you'll see a kid outside playing. Unfortunately, they're all doing the Pokemon Go thing now. Even my college-age kids are into that stuff. But the world's still going on. People still fall in love. People are still going out to the movies. How couples will hold hands, walk in the beach. Things are good outside the world of the television news. So shut that off. Remember that there were many, many, many more good people at that tragedy yesterday than there were bad people. Just remember that. Okay. Number 2, remember that emotions and investing are incompatible. They are oil and water, and you can't let your emotions get in the way. And if you feel that happening, it is vitally important for the success of your financial plan, vitally important, that you get to an investment advisor and have them help you, whether that's a short-term thing, whether somebody just gives you a consultation and kind of gets your head right, or whether you actually need an investment someone to manage those investments for you on a regular basis. I'm all for that too. So please remember that. Number 3, this will pass. Don't stress about it. Don't worry about it. It's not the end of the world. These things come and go, and although we never want to make light of a tragedy or of human suffering like we just experienced over the last few weeks, the big events fade in time. Like, okay, here's one, the Boston bombings. Already we've forgotten that, unless somebody brings it up, right? And we shouldn't forget. People lost lives and had lives changed and horribly wounded from those things. But we forget. And it's not because we're bad people. It's because we're humans. And that there's a recency bias. What happens today is going to matter much more to us in our alertness and our attention than what happened 20 years ago, even if 20 years ago really was worse. So help keep your perspective always. My name is Jeremy Torgerson. I'll wrap it up here today. I'd love to answer any questions you might have on a personal basis with your financial advice. If you have any questions at all, you can feel free to contact me at www.nvestadvisors.com. You can email me at jtorgerson@nvestadvisors.com or call our office at 888-852-0702. Hope to see you next week on our podcast. Until then, God bless you. Have a great day.